Well, the Dow's up 1% after the Fed cut rates, and Fed Chair Powell saying the real division within the Fed now is whether to hold or cut versus any potential hike in the near future. Joining us now is Jefferies chief market strategist and CNBC contributor David Zervos. David, the president wanted a half a point cut here. Is this quarter enough?
I think the quarter's, being rejoiced a little bit in the market just because the market was set up for this hawkish cut and they didn't get it. You got the QE announcement or the soft QE announcement. But more importantly, John, what you really got was a message about how this Fed sees stronger growth without a lot of inflationary pressures. That's what we see in the SEP. And that subtly really changes the ballgame for the potential of a Fed that would get hawkish. Because what gets a Fed hawkish? Strong growth, retail sales, everything's starting to kick in. But what the Fed's telling you is that growth is probably coming from productivity. It's coming from not a lot of job creation, actually a semi-weak labor market, and there's no need for them to fight that. In fact, they may need to be looking at cuts because there's too much job destruction as that productivity growth increases. So I thought it was a very dovish forecast.
Do you think that the market estimates are being too pessimistic then, if you're on that side of it, about no more cuts until Powell's gone? And are you still in the strongly risk on camp?
Still in the strongly risk on camp. Certainly excited about our risk parity trades in 2026. And I do think the market is probably on the mark for some slowing of the risk of cuts as Jay's last three meetings come into play for the beginning of the year, but recognizing that as this Fed composition changes, as we learn more about the Lisa Cook trial and other things, this Fed is turning dovish, and in 2026 will be a more of a tailwind to risk assets than a headwind to risk assets. The beginning is a little risky, but I actually think we took a lot of that off the table today with their forecasts. This was a really, to me, a very dovish forecast, a strong growth dovish forecast, which is hard for people to process. But what they're saying is the inflation risks are really not going to be persistent. And he said that a couple times, Morgan, in the speech, that this was really tariff related and one-off related in all likelihood, inflation.